3, 2, 1. Welcome.
All right.
Welcome to the show, everybody.
It is the Ides of April. I don't know that matters, but, there's no...
I was like, I don't even know what that means.
Well, there's no...
Easter Sunday.
Easter Sunday, that's true.
Yeah. You just got back from a nice trip to the Big Apple. How was that?
Yep. It was pretty great.
Yeah.
Pretty good. Yep.
Yeah, we
Always
both
like
taken a trip up there in the last few weeks, and we both ended up taking the train.
Yep.
And that, for me, was a life-changing experience because I haven't taken a train in so long. It was so less stress.
Yeah, train is great.
If you guys live anywhere on the East Coast where, trains are easy, we're taking one up to Boston to see you guys, going up to Jerry's family.
Yep.
In June, taking my kids up there. But, man, train is it. I mean, if you're not in a hurry.
Right.
Which we're not anymore.
No. We're going up in a couple of weeks to do a little 40-mile bike ride through all the boroughs.
Yeah.
Right?
Well, we're driving up for that because we got to take all our gear.
Yeah.
That's going to be fun. We're going to I'm going to maybe put the GoPro on the bike and maybe have some video to put in the show or something. That'd be funny.
Yeah, that'd be good.
You guys can watch two old guys suffer on bikes.
Suffer for sure.
Well, we're not going to be in a hurry.
No, it's not a race. It's an event.
Exactly. What you got for us this week, man?
All right. So something we haven't done in a little bit, but I thought it was kind of appropriate, seeing as how baseball season is just barely upon us. One of the greats, since we're talking about New York. So Yogi Berra, it's tough to make predictions, especially about the future. With baseball season kicking off, and the markets are the way they are, this is a pretty timely quote, right? Legendary catcher, manager, and coach of the Yankees and the Mets. What you might not have known is he received a Purple Heart for service as a gunner's mate in the Navy during the Normandy landings on D-Day in World War II. Played 18 seasons, was selected to 18 All-Star games, played 14 World Series, and was in 10 championship teams.
Wow. I only know his quotes.
Yeah. No, I mean, the guy was unbelievable, right? So undisputed expert in his game, obviously. And if anybody was in a position to make predictions about baseball back then, it was definitely Yogi Berra, right? But what does he say? It's tough to make predictions, especially about the future. Clearly, he didn't play baseball based on predictions, right? He worked hard, got very good at the game, and played it to the best of his ability. That's the perspective that we have to have in managing our TSP accounts, right? We need to get very good at using the tools and play the game to the best of our ability.
Absolutely.
Yeah. It's the only way to do it, and this market is crazy.
We could call it a Berra market.
Hey!
I wish I knew where the little symbols were
Yeah,
somewhere. I got that on the soundboard here, and I just don't know where it's at.
All right, so that might have been the funniest part of the whole show because I don't want to talk about the VIX, but there's a lot of interest in what the VIX is and how it's applicable and stuff, and we'll talk about it. It gets a little bit wonky here in Investopedia, but we'll go through that and then show how we kind of apply it to the C fund and some of the other stock funds, and then we're gonna kind of switch to number 2 and 3 kind of go together, the historical midterm returns and the decennial chart for year 2. So it's interesting. Ryan Dietrich, we've talked about him quite a bit, and I got the links to his YouTube or his Twitter handle, but he's got a pretty good layout of the numbers and where bottoms tend to happen in midterm presidential election cycles, which is what we're in right now. And then it's supported by the decennial year 2 chart, which we've shown before. It's the chart of the average of year 2, right? So 2002, 2012, 2022. So we're in 22. So year 2s of the decennial, and the average from like 1950 through like 2002 or 2012, we'll say it on the slide, and what happens on average over that year. And it's pretty consistent with the midterm returns, so it'll be kind of good to look at. And then BITQ is Bitwise. We'll take a look at that as the chart. Crypto, all kinds of talk. There's always a lot of talk about crypto, but it's pretty interesting. It will be interesting to see which way crypto goes, because it's been consolidating here for a couple of months. And then we'll do the TSP charts. Okay, so the VIX, right? Everybody's probably heard the term VIX. What it is is the volatility index based on the CBOE, which is the Chicago Board of Options Exchange. So this is the summary slide, and it gets into a little bit more detail, but the CBOE is the options board, right? And so the VIX it's linked to the S&P 500, which is good for us, right? It's not linked exactly to the S&P. It's linked to options, which are derivatives that go back to the S&P 500 index. So the VIX is in its real time, which is good for us too, because you can drill down. A lot of these indicators only do end of day, so you have to wait until the end of the day. It closes. The computer does its thing, and it gives you the, for example, volume takes a long time on Friday to give us the weekly volume. But VIX is real time throughout the day. So represents the market's expectations for the relative strength of near-term price changes of the S&P 500, which is our C fund. So because it's derived from prices of the SPX index options, which with near-term expiration dates, it generates a 30-day forward projection for volatility. So volatility, we talk about all the time. It's how fast prices change, right? It's kind of the magnitude of that price change. It's often seen as a way to gauge market sentiment, and in particular, the degree of the amount of fear in the market. So it's often called the fear index. More commonly known by its ticker symbol, often referred to simply as the VIX. It was created by the CBOE, and it's maintained by their global market section, and it's now certainly a worldwide index. A lot of people look at it as a measure of risk and overall market sentiment. So how does it work? VIX attempts to measure the magnitude of price movement of the S&P 500. Its volatility, right? How much the price moves. So the more dramatic the price swings in the index, the higher the level of volatility, and vice versa. In addition to being an index to measure volatility, traders can also trade VIX futures, options, and ETFs to hedge or speculate on volatility changes. And we'll take a look at a chart and see how you might be able to do that. Okay, so the VIX was the first benchmark introduced by the CBOE to measure markets' expectation of future volatility, right? Because that's what everybody wants to know, what's going to happen in the future. So being a forward-looking index, it's constructed using implied volatilities on the S&P index options, because people buy options today based on what they expect to happen in the future. Represents the market's expected 30-day future volatility of the S&P 500, and it's considered the leading indicator of broad U.S. stock market. Introduced in 1993, it's now an established global recognized gauge of U.S. equity market volatility, calculated in real time, which is good for us. Calculations are performed on values relayed between 3 a.m. and 9:15 a.m., which is when the futures market is open, and then from 9:30 to 4:15, which is when we're going to look at it in terms of monitoring prices throughout the day. Okay. So VIX versus the S&P 500, volatility value, investors' fear, and VIX values, right? So all those things move up when there's fear in the market, so when prices are falling. And the reverse is true, right? When the market moves higher, the fear in the market and volatility tend to decline. So price action of the S&P and the VIX often show inverse, often, not always, show inverse price action. So when the S&P drops hard in a day, the VIX spikes, right? And vice versa. If prices go up really fast in a day, the VIX drops really quick. So as a rule of thumb, I'm going to show this on a chart. VIX values greater than 30 are generally linked to large volatility resulting from increased uncertainty, risk, and investors' fears. VIX values below 20 correspond to when things are stable, stress-free, meaning the markets are moving higher. Okay, what does the VIX actually signal? Signals a level of fear or stress in the stock market. Okay, so using the S&P 500 index as a proxy for the broad market, and hence it's known as generally the fear index. So people look at the VIX not only in terms of the S&P, but also for the NASDAQ and the Dow and any other index that you're following. And again, levels over 3 imply a lot of fear and uncertainty in the market. Over 30, and below 20 tends to be when the market's moving higher. Like all indexes, the VIX cannot be bought directly. So we use $SPX as the chart for the C fund, but actually SPY is the ETF. If you were going to try to buy the S&P 500 index, you would have to do it with an ETF. You can't buy the index directly. Same thing with the VIX. Okay. So here's a chart of the C fund daily for 1 year with the VIX down here. So here's the VIX chart, and here's the price chart of the C fund. So you can see in this section here in 2021, when the market was moving higher, the VIX kind of oscillated, right, between 15 and 22.5. Okay. And back here, when we have this correction that we're going through right now, anything over 30 up here, the price is falling like dramatically. Okay. So what tends to happen is the VIX is low, right? Here it's between 15 and 22.5. So we said anything below 20, it indicates that prices are moving higher, and they are, right? Prices are going up. The VIX is pretty stable down there at around the 20 range. Same thing over here. We get up above 30. Obviously, it's going higher than 20. So here's the 20 line, and prices are falling, right? Which makes sense. So when the VIX goes down, prices go up. When prices go down, the VIX goes up. Okay. So that's all good. But how do we use it to kind of help us think through what's going to happen going forward? So this piece right here was pretty interesting because the VIX was increasing, right? The VIX was trending higher, even though prices were also trending higher. So what does that mean? If the VIX is moving higher, it means that the feeling in the market is getting more fearful, even though prices are moving higher. So it indicates that at some point in the near future, prices are going to tank, which is exactly what happened. I mean, this was a great thing to watch. If you see the VIX going up and prices going up, it's not going to stay that way for very long. All right, that's probably the best takeaway of this chart. The other thing is, right now, it's a little bit hard to see. If we had a longer term chart, you'd see it, but down here, the VIX bottoms at around 15. And we got a bunch of 15 bottoms, but starting at the beginning of this year, the VIX is trending higher. We're getting higher lows, right? So even during these rallies, the VIX, the market sentiment is not buying these rallies, and that's what happens in a bear market. The VIX will come down to a certain level. We're probably not going to see the VIX down here at 15 anytime soon. So even though we're saying 30 on the high side and 20 on the low side, now 20 probably is the low. The next time, if the market rallied here, to get the VIX down below 20, I'd be really surprised before the market rolled over again. So it's just one of those indicators to kind of take a look at. But in terms of looking at it right now, price is coming down. VIX is only at 24. I did this chart a couple of days ago, so VIX is up a little bit above 25 right now, but it's definitely not up in the 30 range where we should start looking for a bottom. So what I'm saying is I'm not looking for a bottom just yet. If you're a subscriber to the site, the newsletter that we'll post at 6:30 or 6 o'clock, I guess, on Sunday night, goes into a lot more detail about the possibilities going forward and the importance of this 4650 level and this 4150 level. Anything that happens here in between is pretty much anybody's guess, but if we get above 4650, we're in good shape. If we get below 4150, we should expect the market to keep going lower. That's kind of the bottom line. Okay. On a more optimistic note, so the midterm historical returns, so the midterm of the presidential cycle. So again, here's the link to Ryan Dietrich's Twitter handle. He goes back and does starting from 1950 and goes through to 2022, right? The pullbacks during a midterm year. So that's what we're in right now, is a midterm year. This is the maximum drawdown. So the pullback, the maximum pullback that happened during the midterm cycles for all those years. They're some significant pullbacks. 26%. They're almost 7.5%. 33% here. You get some big pullbacks, but the return 1 year later, right, was all positive, and a lot of them were really high, right? 44% here, 40%, 57% here. So just because we're having a pretty significant correction right now, a pretty good pullback, it does not mean that later this year or going into next year, we can't have some really significant increases in the stock funds. Okay, that concept is definitely supported by this decennial cycle. Okay, so the decennial cycle shows the average. The decennial cycle itself shows the average of 10 years each decade, and then this chart is the average of the 2 years, right? So 52, 62, 72, all the way up to 2012. So if we average out the 2 years ending in 2, this is what the chart looks like. And it's calling for a pretty difficult market in the first half of the year. And the second half of the year is pretty strong, particularly the fourth quarter. Okay, so the fourth quarter of year 2 tends to be really, really strong. So if you take that chart and you kind of compare it to this one, it makes sense that the pullback that we're experiencing right now could give us a great platform, whether it's early in the summer or in the fall, to have a really, really strong rally going into the beginning of the year. So that's kind of, take that as a backdrop, right? So basically what, for my purposes, we're watching this correction as it happens. At some point, we'll bottom out, and the VIX will be really high. There'll be a lot of fear in the market. But if you have as a backdrop, if you expect a big move higher in Q4, you might use that as an opportunity to get back into the stock funds sometime in the summer, depending on how the charts look, or early fall. Okay. Bonus chart, Bitwise. So ticker symbol is BITQ. It's a San Francisco-based. It's one of the largest, fastest-growing crypto asset managers. So as of March 31st, 2022, so just last month, Bitwise managed $1.2 billion across an expanding suite of investment solutions. The firm is known for managing the world's largest crypto index. It's BITW is that index, and pioneering products spanning from Bitcoin, Ethereum, DeFi, and crypto-focused equity indexes. Bitwise partners with financial advisors and investment professionals to provide quality education and research. And the one we're going to look at, one of their funds, is BITQ. So it doesn't look exactly like Bitcoin, but it's pretty close. We talk about the RSI all the time. When it gets oversold, you're potentially at some kind of bottom, right? You had accumulation distribution, which we talked about last week or the week before, got low. On-balance volume got low. And then we had a bit of a breakup. So we had a low there at 14. We got a run higher. Just barely got above that 50 line, which has been very difficult for everything we've been looking at to get above that 50 line. But then it couldn't stay above it, right? Couldn't get above that 50 line, so we had a bunch of chop there. But we got 14 as a floor, right? We've hit 14 4 times, and we're coming back to it now. We're at 1440. You got RSI almost to oversold levels. So from these two things, I would look at buying Bitwise on its next test of 14. Ideally, we get down here to oversold in the RSI, but it would be really good to see accumulation begin to tick up and unbalanced volume begin to tick up a little bit before the bottom. So what I'm really looking for is some kind of move higher in accumulation distribution and on-balance volume before we get the final low on this test. And of course, if it goes positive, that's awesome. If it breaks 14, if we get down to say 1380, then Bitwise is going lower. So kind of the way you would look at this pattern. It's we certainly had a big move down. You got a pretty good consolidation here. So the risk reward here is really good. If you buy it at 14, you expect it to move higher because it's done that every time over the last couple of months. If it goes below 14, it's never done that over the last couple of months, so it probably goes lower. So your risk reward is pretty good. Okay. TSP fund charts. So C fund is kind of interesting. We've been talking about this here for the last several weeks. This is a little bit more, I'm calling it the 2-year weekly, but obviously every week it moves forward. So this is actually like a 2-year and 2-month chart. Once we got back above the 20-week moving average line.
So you want to keep that little dip in there for perspective, right?
Right.
Otherwise, that makes it like a really pretty chart.
Yeah.
You love that if you just move. If you move to the right a little bit, everything looks wonderful.
You got to keep a little bit of perspective in there for sure.
Yes, I'm proud of you for that.
I mean, we got this oversold conditions here, which indicated the bottom. And after COVID, market explodes higher, gets above that 20-week moving average line. Okay. And that's also on a weekly basis where we got back above that 50 RSI line. And we stayed above that 50 RSI line until January, when we also went below the 20-week moving average line. So you don't need a whole lot of indicators. If you're looking at this once a week, it's pretty straightforward. You want to be above 50 on the RSI, and you want to be above that blue 20-week moving average line. So in the C fund, we broke below it in January, and then every time we tried to get back above it, couldn't get back above it until 4 weeks ago there. We finally got back above that 20-week moving average line and didn't stay there very long. We had 1, 2, and then last week we pretty much closed right on it, but I'll call that 3 weeks above that moving average line. And then this week we closed pretty substantially below it. And we also ticked below 50 RSI. So if you are a weekly follower of your TSP funds, now is not the time to be in the C fund. S fund gives you kind of a better understanding, I think, of the whole thing because, like we said in the C fund, once we got above that 20-week moving average line, every time it hit it, stayed above it all the way until, for the S fund, it was November, broke below it, and then every time it tried to get back above it, couldn't do it. Almost got there last week, but no go. So once we close below that RSI 50 line, haven't been able to get above it at all. So the S fund clearly is not the place you want to be. I fund, pretty similar. This 20-week moving average line didn't work so well in this section for the I fund. But the concept is still there. Once we broke below it, back here really in November, same as the S fund, we were above it for a couple of weeks in here, but then immediately rolled over in January and has not been able to get above that 20-week moving average line. The RSI kind of, it's not as clear in this section, which is kind of consistent with it's not so clear being above or below that 20-week moving average line. But once we got above it back here, it stayed there really until the big main breakthrough was the one in January. Same thing for the C fund. Got below that 50 line, and that was it. So tried to get back above a couple weeks ago, couldn't do it, rolled over. I fund, also not the place you want to be. F fund is a complete disaster. There's no telling when the bottom is going to be in for the F fund. We've talked about this before. Sometimes when we get oversold, it's an indication of a bottom, and prices, we get a V bottom and prices go higher. It doesn't always have to be that way. You can be oversold for a long time. We started oversold a little bit before February, so basically the middle of January here, we got oversold and prices have come down a lot. So we've stayed oversold. Prices continue to fall. When we get a tick up above that 30 line, right, that'll be, people will start to think that there's a recovery happening, and it may turn out to be that, or it may be something like this and keeps going lower. We'll see what happens as it plays out. But as the chart is right now, there's no point in being in the F fund. So that leaves us with one alternative, the G fund. And then actually somebody on Facebook the other day said, I put up the, I'm going to have to change this actually, because the market this week slide that we put out on Friday after the close, somebody commented that there's no G fund in there. And the G fund always goes up.
Yeah.
It doesn't go down. It's always green.
Right.
It doesn't go up much. Never goes up much.
Yeah. But it's green.
But it's green.
Yeah. You should add it.
I'm going to.
For context, for perspective.
Yeah.
Because, you know, obviously sometimes we're in the G fund. That is a good catch.
Yeah, it is a good catch.
Yeah.
I just assumed that by default everybody would know that. But, yeah, I'll add the G fund and put in the percentage gains from the actual TSP side. I'll figure out how to do that. Because there is no... I've talked about this before. The G fund is the best. It's the best thing going for us because you get a really high rate of return, considering that you can move your money every day in and out of the G fund. Because if it's like your bank account, right? You can move your money in and out of your savings account every day, but you're getting almost nothing for that. And the G fund, at least you're getting at this point like 1.8% a year.
Something.
G fund. Something, yeah. Better than nothing.
Something's better than nothing.
Yeah. So I think I blew through that pretty quick, but
questions.
That's the way it goes.
Yeah. If you guys have questions, make sure you put them in wherever you find this video. Facebook, YouTube, Instagram, wherever you find it, you can put the comments in there. If you find it on our website, there's not a comment section. You can always shoot us an email at send it to support@growmytsp.com. You can send it to info, but that just forwards you straight to support, so might as well go there anyway. Yeah, a lot of interesting things in there. I didn't jump in too much on the VIX because I didn't want to slow your flow, but I have thought about, like, you know, I mean, that's a good, useful tool all the time, right?
Yep.
A lot of times we don't have that indicator per se at the bottom of our charts because we want to look at other technical indicators. But if for those of you that are just learning how to do all of this, I would say if you've got your list of charts that you've put together for your week, and if you need some help doing that, we have some videos on our website. You can go, and it's like Charting 101, and it kind of walks you through how to build that stuff. That is one of those charts that I would build and have and go look at weekly because it gives you an idea. It's a very good predictor. Again, it's one indicator, so don't get too wrapped up in it. But if you were to take all of the things that we normally use, you know,
the MACD and stochastic,
RSI,
and
volume, price, all that Jerry usually has in his slides that will show you lots of information in one place. That, and then taking that perspective of the VIX, you kind of start to get some indication of like what could be happening in the future. Yeah. And that's as close as you're going to get to a crystal ball if there ever is one. Yeah. And so it's really handy. I recommend everybody kind of set that up for themselves and start to get a feel for that. Again, we're trying to give you the tools to do this on your own. Yep. We do have a service where we not only give you deeper analysis every week, but we also let you see when we move our money, which most financial advisors would never do. But we do that. And it's not to say, hey, this is when you should move your money. It's to kind of give you a validation, look over our shoulders kind of thing. But the takeaway here is that we want to teach you guys how to do it because when we were coming up for the last 30 years, nobody was there teaching us. Nope. And so if you like it, share it with your friends. And we look forward to seeing you guys out and hope you have a great week.
Sounds good.
Happy Easter.
Happy Easter.
Music cued.